Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Algorand, conduct machine learning based price forecast for Algo, regression analysis, accumulation strategies, and estimated bull target. None of the content is financial advice. Over the last some of the key periods, Algorand has had a significant rally of about 30% over the last 7 days. Over the last 24 hours, still up by about 2.5%. Market cap about 1.2 billion, and also in terms of tokenomics for Algorand, about 10 billion max supply, out of which 82% is already in circulation. So moving forward, this tokenomics should quell down any token based inflation. So that means any growth in market cap should get reflected back in price. So you can see that if you toggle from the market cap view and price view, essentially the same or similar charts, that is because the market cap is moving in tandem with price. In terms of some of the TA related things for Algorand, the current price is slightly above the 20-week simple moving average as well as a 21-week exponential moving average. Right now, those values are at between 13.5 cent and about 14 cents. So the 20-week simple moving average is at around 13 cents, and the 21-week exponential moving average at around 13.75 cents. So per this per this model, this is just a technical analysis of Algorand's price action and how much time Algo has spent in one territory. So there is this one confluence where some major level to watch is at around 18.5 cent, where Algo spent most of its time during December 2022 till about also during the pullback around January 2024 and again April 2024. Second level is where Algo spent a lot of time in June of 2022 till about November 2022 at around 30 cents or 32 cents. So those are the two levels to watch in the rally, because those levels might offer a great bit of resistance because of lot of buying and selling happening at those levels. The third level to watch is at around 74 cents, where again there were two instances where Algo spent more time in it. Was during the summer lull of 2021 and also during the crash of 2022, early 2022 in April of 2022, and also near the top in the first half of the bull run about between March 2021 then again early 2022 towards that level at around $1.43. To summarize everything that we discussed so far, the key levels are 18.5 cents, 32 cents, again 75 cents, and $1.44. So these are the TA based levels. Now we'll go and check our website. Again, the link is on the bottom of your screen, cryptoweeklies.com. It has information about Algorand, and not just Algorand, most of the top 100 cryptos by market cap. This is the machine learning based price forecast trend on weekly price action of Algo since 2019 when Algo was launched, and then ever since that the weekly price action has been used to train the machine learning model using algorithms such as ARIMA, LSTM, and XGBoost. And these are the three scenarios forecasted by the model. If this is the trend based model, using the pink line is the trend based price, the yellow line is the 1 standard deviation bull case, the green line is 1 standard deviation bear case. Right now the prices are close to this base case at around 16 cents forecasted for the next week. The 1 standard deviation bull case for next week is at around 17.5 cent, and if we take this model and take the forecast till about middle of April of 2025, the 1 standard deviation ceiling for Algo is at around 25 cents. If on the other hand, if the markets exhibit this euphoria phase like they did back in late October 2023 till about December 2023, that euphoria phase is well captured by this 2 standard deviation ceiling at 95 percentile confidence level. The price is staying under this orange line between 19 cents to about 56 cents for Algo. Right now again there is a confluence between this 19 cents and this 40 cents, and as well as this 76 cents with the technical levels as well. So that's the bullish side of things. If on the other hand, if there is a crash in the market due to recession or any micro event, the support at 1 standard deviation confidence between now and April is at between 7.5 cent and current price of about 14.5 cent. Tabularly, you can visualize this to interpret these results is that this is the base case. This is the pink line over here captured by this base case. To its left are the 3 standard deviation bear cases. To its left, to its right are the 3 standard deviation bull case. Left is bear cases. So with the probabilities that 68% chance that the price for this week stay within 14.5 cents and 17.5 cents. 95% chance that prices stay within 13.5 cent and 19.2 cents. And again 99.7% confidence that the price stay between 12.4 cent and 21.21 cents. So that's the machine learning based price forecast for Algo. We also have regression related analysis for Algo. We'll spend some time on analyzing what is the current price doing with respect to the polynomial regression function that we have. We'll get rid of the other bands to understand what the price is, or the fair value of Algorand per the polynomial regression analysis looks like. In the bear market, the band has a downward slope. In the bull market, an upward slope again. During the bear market, you can see since about January 2024, this polynomial regression based function has an upward slope, indicating that prices are more likely to go up with time. Right now, the fair value per this model is at around 32 cents, quite close to this TA based level at around 33 cents. This yellow line, again confluence between that and the fair value for Algorand per the regression approach. That means per this polynomial regression analysis, Algo is kind of undervalued per the and also not just with respect to the polynomial regression function, also the 1 standard deviation residual applied to the regression function. That key level is close to that 18 cent that we mentioned at the start of the video. That level is close to the 20 cent level at this point in time, which is close to this green line over here. And now that we have covered the 1 standard deviation, we can see that the prices are close to the 2 standard deviation bottom regression. Right now the price is close to this level at around 16 cents at one point in time. Right now they have come back to this 14.5 cent. So that means that support that the green dark green line is exhibiting at around 12 and 12.85 cents. That is a key level to watch if for any pullbacks. So if the prices meaningfully hold this 2 standard deviation support, again prices have spent 95% of the time above this dark green line. I will get rid of the other lines for you to better visualize this. The dark green line represents the 2 standard deviation bottom. Prices spend less than 5% time below this, as well as to complete this analysis. This is the 2 standard deviation regression to the upside and to the downside. Together the prices spend exactly about 5% time outside this scope, most of the time towards the upside and some time towards the downside. Again, the 2 standard deviation ceiling to the upside for Algo is at around 84 cents. That means an 84 cent Algorand would be as overvalued as Algo was in at around $2.30 back in early September of 2021. Right now that level is at around 84 cents. That is a key level to watch for a potential bull run peak. So with this Algo looking at around accumulation from an accumulation standpoint, this is the simple moving average based analysis for Algorand. The risk levels per this model based on what the prices are doing with respect to 20-week moving average coming in at around 30% risk, 70% reward. The key idea with this model is to make sure that while DCing, we are not DCing at some of the higher valuations or some of the higher risk levels where it's better to not DCA or DCA out of the market. So for example, if an investor thinks that it's better to DCA whenever the risk levels are less than 30%, that investor would be able to avoid DCing during this grayed out portions of the you can see I'm just graying out between 30% and 40% risk. Again, avoiding these zones help a great deal well when DCing over a longer period of time, where avoiding some of the higher risk related DCA is kind of detrimental in the longer scheme of things, especially for an altcoin which kind of oscillates between one all-time high to the other all-time high, and at times sets lower highs for a market cycle compared to the previous all-time high. So in that case, again, if the hypothesis is not to DCA whenever the risk levels are above 20%, again, this is one indication again where some of the higher risk levels are avoided. But one could make a case that per this model there is a risk that an investor would kind of throw money when the market is about to crash during a macro bottom formation or during the course of bear market. Again, that's why this model is not one silver bullet for all the scenario, just helps identify some of the higher valuation zones or higher risk zones. When this model combined with the other model, which is the DCA model that we have for Algo, that model identifies not just based on the risk levels in the bear market. Again, this identifies the risk levels in terms of how they are performing with respect to the polynomial regression function, and if they are sufficiently undervalued in terms of their risk pair. You can see over here for this analysis, whenever DCing at the low risk level, that is between 0 and 0.1 risk, you are essentially avoiding not just the SMA based valuation which started flashing undervalued over here in Jan to April of 2021, but again avoiding DCing till about the price reached 50-cent level back in the bear market. But still, again, no model is perfect where you could forecast that okay, if the prices are sufficiently low over here, that doesn't mean that the prices will go lower somewhere close to the 10-cent level. But again, towards the end of the bear market, DCing whenever the prices are having an upward swing. So for example, over here the prices had the regression function had an upward swing, and the risk levels were between 0 and 0.1, like they are over here, where the risk levels are again between 0 and 0.1. You can see that at around 16 cents, Algorand is still considered per this model at around 3% risk. The fair value would be similar to the one that we discussed at around 33 cents, and the peak regression valuation at around 72 cents. And per this model, again, this model can be used to forecast what can happen to Algorand's price at certain key risk levels. At 0.5 risk, the price would be at around 50 cents. Right now the price is at around 14 cents, which is close to this 5% risk. In terms of some of the lofty goals for Algo between 50 cents and about 72 cents, and some of the stretched goals between 76 cents and 87 cents for Algo per this model. Right now, again, a DCA during an upswing of a regression model like it was in early or late 2020. Algo is offering that kind of risk reward at this point in time. Again, this is not financial advice, this is just analysis of data. And in terms of time weighted average price based model, the key idea with this model is that DCing only when the price has gone below the blue line, which is the time weighted average price, over a longer period of time. Eventually, if the market picks up and if the asset has a presence in the bull rally, the DCing below this blue line usually works out. Again, you can see that over in October 2020 when the prices were below this blue line, and Algorand participate in this 2021 rally helps identify not just the undervaluation but also the overvaluation based on how the prices are doing with respect to this blue line. Again, right now the risk would be 0 because the prices are lower than this blue line. In terms of the estimated bull run target, which is a composite of this the three models that we discussed: the simple moving average based model, the regression, which is the DCA model, and the time weighted average price model. The 3% risk, the 0 risk, and the about 30% risk. Weighted risk which is a composite of these three risks, at around 7%. The bull run target for Algo per this model is at around $1.90, which represent about 13x reward from the current price of about 15 cents. So with this I would like to conclude the video. Hope you enjoyed the content. If you did, please subscribe to the channel. Also give this video a like. We also have some of the analytics related to crypto, such as social sentiment over the last 24 hours, pointing to about 85% bullishness. Some of the word cloud, which helps us identify some of the narratives related to crypto, such as the popularity of the bullish sentiment, as well as the Bitcoin and its rally, and some of the other altcoins. So such charts are covered in detail every day on the website and also on the channel. So I urge you to subscribe, and hope you have a nice day. Hope to see you again tomorrow. Thank you and have a nice day. Bye bye.